Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. We're counting down to the next VRIC January 21st and 22nd. There's a link for tickets in the description below. And today's guest is an expert in technical analysis and a pro trader with over 30 years of experience, as well as being the CEO and chief market strategist of InTheMoneyStocks.com. It's Nick Santiago. Great to have you on the show.
It's great to be here. Thank you for having me.
I want to start with the broad markets, the S&P and the NASDAQ, because as a lot of people are aware, there are a few tech stocks that seem to be holding up those indices. And in many ways, from a fundamental perspective, anyways, it seems like it's a house of cards. So what are you seeing from a technical perspective? Do you think this rise is going to continue? Are we overbought here and due for a correction?
Well, we're certainly overbought and due for a correction. I think that could start to take place in the coming months, probably more towards October, September, even August. August, you want to be a little bit careful. I know it's called the summer doldrums and it's kind of a boring time period, but, you want to be a little bit cautious now because we've had a meteoric rise. And, when you look at the S&P 500 right now, we are starting to see a little bit of broadening going on. Some money has gone into the transports. Some money has gone into some other areas that have been, kind of kicked aside for a while, as you only had the Magnificent Seven, as they're calling them recently: Netflix, Microsoft, Amazon, etc. So right now, you definitely, start to be a little bit cautious here. But just think about this for a minute. The market rally really began in earnest in March, and that's when we had a financial crisis. So, it's the same solution to all the problems. Just print money. They opened up a special discount window for the banks. And, then they did another separate type of program with the other central banks around the world to provide liquidity for each other. And that's hence your rally in 2023.
And what are your thoughts on AI as an investment trend, as it does seem to be driving some of these tech stocks? Some people have compared it to the dot-com bubble. I've spoken to people like Frank Holmes who say no, because the dot-com bubble, a lot of these companies weren't profitable, whereas you look like a company like NVIDIA, and it is quite profitable. So what is your thought there? Is AI something that you think will have strength for the foreseeable future, or is this a bubble that is set to burst?
Well, it'll eventually turn into a bubble, but right now it's still kind of new. It really just came on the scenes after NVIDIA had their last earnings report. That's when the stock market actually broke out of a long, 6 to 8 week trading range. So, there's some legs to that. And you have to respect that NVIDIA is the leader of the pack. Really, there's not many other companies that are making that kind of advance. You could look at SMCI or maybe a few others out there. But NVIDIA is by far so far ahead of everybody. That's really why, the market is pricing in such a big multiple for a stock like that. So, they're head and shoulders above everybody else at this stage of the game. But other companies will catch up. And once that starts to happen, then, NVIDIA will have a major correction. And then other companies will fall by the wayside too. And some of them won't make it. But right now, everybody's on this AI craze. And that can last for a while. I remember, when I was a trader in the 90s, that dot-com bubble lasted a long time before it popped in March of 2000. So, people just have to realize this can go on a little bit longer, and it can broaden out too. I think the bigger picture, though, is that you take this market in stride, because there's a big inverted yield curve out there. And that already caused a major banking crisis in March of this year. So don't think that yield curve has changed. It's still a big inverted yield curve, especially between the 2-year and the 10-year. And that has always forecasted big problems. So right now, believe it or not, the stock market rally is due to the financial crisis, because it's just liquidity in the system. And that's all this game is about. When liquidity is in the system, the stock market moves higher. When liquidity gets withdrawn, the stock market declines. And right now, there's still a good amount of liquidity in the system.
How much of this situation that we find ourselves in do you think the Fed is responsible for? We're seeing a lot of economic data that's pointing to a potential recession. I've heard dire predictions from that we're entering a deflationary depression to we're going to enter one of the most severe recessions we've ever seen in modern history, to other people who think things might be more moderate, a soft landing. Where do you see things heading? And is the Fed the one who engineered all of this?
Well, the Fed is probably the primary conductor of it all because they can print money. If you go back to March 2009, I mean, I know we were promised a lot of different things by, change of administration, but it's all the same. It's just money printing, and that's their only method. The way they do it is with different programs, but it's ultimately the same program. So, again, this time around, they're doing money printing, but it's not called quantitative easing, right? They're not giving us the so-called quantitative easing term. So, but they did it in what a lot of traders are calling a stealth mode, where it's a discount window. They're still they're still printing money or throwing money at the system. Look at the Japanese market with the Nikkei on its meteoric rise. That's all just money printing. China, every time China falls, they come out and do a money printing program. That money is global. It goes all around and it circulates, and that's what causes the move. So all central banks are at fault for what we're seeing, but they don't look at it as being bad. They look at it as, hey, we're keeping the system going. So this system's going to collapse. It's not right away, but we're in 2023, approaching 2024. We got 5, 6, 7 years maybe left of this. We're at $33 trillion of debt in the United States. Put that in a fractional reserve banking system, leverage that by 9. I mean, we've already crossed the Rubicon. So, I tell everybody, enjoy the market, follow the trend via technicals, because I'm not smart enough to figure when this thing is going to implode. But I think we have, a few years to go. And, I don't think it's going to be a straight up move. I think 2024 is going to come with lots of headwinds. They can't just keep printing money. You also have wars going on, right? The war in Russia and Ukraine, that's inflationary. So, you get a war going on in China and Taiwan. So if that were to happen, God forbid, that's inflationary. You get some supply disruptions. That's inflationary. So, yes, the bigger picture is it will end in deflation. But right now, we went through the deflationary phase. Now we're going into the inflationary phase. And that doesn't end as quickly as people think. It's not transitory.
A lot of the things you've mentioned so far, you mentioned the war in Ukraine, you mentioned the out of control money printing. These are things that gold bugs would point to as key fundamental catalysts for gold. And gold has performed quite admirably this year. We're hovering around the $2,000 level. We've been there, give or take, for a while now. Do you see the possibility of a breakout potentially to new all-time highs up ahead? Could gold correct and go lower before it goes higher? How do you see that playing out?
Yeah, well, eventually it's going to break out. So we've just completed a triple top basically from, I think it was March 2020, around the 2080 level, and we've tested that area 3 times. You're usually not going to crack through it on the 3rd time. You usually have to hit that a few more times, and then you'll bust through. So yeah, we could break out, but I'm still in the camp. We're going to probably see gold correct one more time before the big move comes. And when the big move comes, it's going to break out to new all-time highs, probably by 800 to 1,000 points. And I do think gold will test 3,000. I'm not in that 5,000 or 10,000. I'm not saying it's impossible. I'm a realist in this business. I go by the measurements of the past, and that takes us to roughly 3,000 ultimately. But I do think we could correct first. And, if you get a chance or an opportunity to own gold around 1,600, I would load the boat there. I would load the boat. Originally, a year ago, I thought gold was going to go test 1,450 to 1,500. It got down to the 1,618, I think it was, and then it reversed. And, it's still holding up well. It's still very strong. And for all the reasons we've just talked about, the fundamentals are behind gold. And I even think a better play is silver, but we could talk about that in a moment. But right now, you just let the charts tell you what to do. If it breaks out above 2080, I would probably jump on gold and try to catch the next leg up. But overall, I still think there's a chance that even now we could pull back. The one thing that's given gold a big shot in the arm right now is the dollar. The dollar is starting to break. So the dollar, has downside right now, probably to 94, 95 on the Dixie. And that's where the dollar is going to have a big resurgence. So a lot of people are calling the dollar dead. They're saying, oh, the BRICS are going to go gold based, and they think the dollar is not dead. The dollar is in correction mode. Remember, it went up to 114, 115 not that long ago. So this is just part of that natural correction. The dollar gets down to 94, 93. I'm a buyer of the dollar there. So, that all these correlations coming into play, you just have to wait and let these charts, dictate these levels to you.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
Well, let's discuss silver as you brought it up there. And you said you had higher conviction in silver than gold at the moment. How closely correlated is silver to gold? Because some people are pointing that it might start to correlate more to copper and become more of an industrial commodity, and some are seeing it more as a monetary metal. Does it track gold closely? If gold performs, will silver perform as well, or is it not as simple as that?
Well, it does have that industrial type metal to it now, since all of these electronics are out, right? So silver is basically in every electronic device that is out there. And it's a lot easier to get silver than it is to get gold, or you'll get more of it than you will get of gold when you mine it. So, I like to look at the Wizard of Oz. Remember the Wizard of Oz? At the end of the story was the ruby red slippers, but in the book, it's the silver slippers. So, you follow the yellow brick road, but the answer to it all is silver. And silver bottomed in September of last year. I was a buyer. I know we didn't know each other at that point, but I had told my members we're going to buy physical silver. I don't care if you have to pay up for coins or whatever. Buy it right here. It was 1740. That was the level. We nailed that bottom. Now silver is doing a lot of backing and filling. Got up to $24 an ounce, $24.50, $25. Now we're doing a lot of backing and filling. And, the next leg takes us up to around probably $33 to $34 an ounce, and then ultimately 50, back to 50. So I love silver at all levels here, but I'd love to see it get down to around 2021. And if you get that chance, just load the boat up. Even if it goes a little bit lower, it doesn't matter. But I will tell everybody should have a little physical exposure. It's a good thing. I've been buying gold and silver since 2003, and I've never sold a single ounce of my physical product.
How are you seeing the mining equities, the gold and silver mining equities at the moment, particularly in the junior mining sector? I'm seeing a lot of really poor sentiment, people throwing in the towel, people's portfolios are heavily in the red. Now, that's usually because they're speculating on junior miners and, devoting probably way higher of a percentage of their portfolio to that sort of speculative space than they should. But do you think there's any opportunity there, both in the juniors and, the bigger producers, the VRICs, the Newmonts?
Yeah. So my theory is you always stick with the big guys until they run. Once the big guys break out, that's where you want the juniors, because the juniors always coattail. It's just like a stock market rally, right? Right now we have a stock market rally going, but you're going to start to notice that it's like a dash for trash now. Everybody wants like the stocks that are underperformers, haven't done anything. So people are buying, the SEs of the world, and, stocks that have been, kicked by the wayside. They've fallen so far down. They look horrible, but now they're getting big bids and they're getting short covering rallies. That's the same thing you want to do with the junior silver miners and the junior gold miners. Once the actual big guys start to take off, you jump on board then, and they're going to be very good performers. So I don't dislike them. I would tell everybody that owns these gold miners, junior miners right now, to sit tight. You've already been in a ton of pain, and it's not going to change right away, but your day is coming. So, sit with them for now. You just have to be patient, because you're buying equities that are not big performers. They have a lot of debt to them. There's, they're waiting on a specific mine to come to fruition. It's very, very tough. But you keep an eye on the Newmonts, you keep an eye on the Royal Golds and the VRICs. And once they start to perform, you jump on the junior miners, because they're going to do really well down the road. I know right now it's painful. I don't own any of them at the moment, but I will get back. I will get into some, probably via the GDXJ, which is an easy way to play the group.
And what are your thoughts on copper here? Obviously, there's been a ton of talk about how we do not have enough copper to meet all the demands of this green energy transition. I don't think that transition is going to happen the way the political class thinks it is, but nonetheless, they're going to try their hardest, and that's going to require a lot of copper. These mines take an incredible amount of time to permit. It's incredibly expensive to bring them online, and there's very few producing copper mines or mines set to go into production to meet this growing demand. However, people are pointing to the chances of a recession, bringing the copper price down. What's your shorter term and longer term view on copper?
Yeah, so short term, I think copper still could have a corrective move. I love copper down at 310. That's the level I've worked out where I think, it broke out in 2020 and it had that huge meteoric rise. And now this is a corrective move here. So we should have another leg down to around 310, 311. You get copper down there, load the boat for all the reasons you just mentioned and more, because they're going to try their best to, go 5G, 6G, and all of that requires copper. So, I would honestly pick it up at 310 with both hands and do it with the companies as well. Freeport Mac, Southern Copper Corp. Maybe you go with a Rio Tinto, BHP to a lesser extent, but direct plays would be Freeport McMoran and Southern Copper. But wait for copper to get down to 310. When the copper futures get to 310, it's load the boat time. I believe we're in the beginning of a commodity Super Bowl. So this is just we're just starting that, and it'll take some time. Not everything is going to go together. They're not all going to go at the same time, but keep that level on your radar. I would write that level down to everybody here. 310, you just load up on copper.
And are there any other base metals that are currently on your radar? Nickel, tin, I've heard some people refer to as a big opportunity right now. Is there anything that you're watching in the base metal space?
Yeah, I watch them all for the most part, but I primarily focus on gold, silver. Platinum is one I'm watching closely. 860 for platinum. I would just dive head over heels on that one. You get it around 860. Platinum's already making a very nice move now in the near term, but the next leg down should take you to 860, and that would be I think a multi-year buying opportunity. So I really like that one. I follow aluminum and other iron ore, but to a lesser degree. I don't really remember the levels there. I just have to look at the chart. When the chart says, all right, there's a trade here, we'll do it. But, I always know my gold levels, my silver levels, platinum levels, and obviously copper.
And what about the battery metals? This is another area. Lithium, obviously, there seemed to be a bit of a mania in that space. Lithium carbonate prices spiked considerably before coming back down. There's a lot of these companies. You're seeing all these lithium companies come out of the woodwork, and there's almost feels like there's too many of them now, and that's generally can be the sign of a top or of something that's being overbought. What is your thought on lithium and other battery metals? Do they have a future ahead? Again, this is another situation where the political class in a lot of different countries are pushing EV adoption. But a lot of pundits are pointing out that it might not work out quite as smoothly as people think, and perhaps there won't be such a big demand for these battery metals. What are your thoughts?
Well, I think right now lithium's had its day in the sun, so I'm looking for that to have a major correction. I don't like it at all right now. I'm not even a fan of EV because that's just an exporting of energy in some degree. I mean, it's really, it gets pushed on us by the political class and the elites, I guess. But it's really it's not even a good product. So and you're going to have people now starting to say, well, what do we do with these batteries when they're no longer functional? Where do we store them? What do we do? They're full of contaminants. Where are we going to put them? I don't hear the greenies talking about that, but they should be talking about that right now. So I don't like lithium right now. I do think it'll go lower. I don't have my level in front of me on lithium, but I could always email you that level. But I think we're in for a big corrective move in lithium, and anything that pertains to the battery can also be in a big corrective move too. But they will rebound. They'll come up and they'll get another big bid. They'll bottom out. Like I said, we're in the infancy of a commodity super cycle or a major bull run for several years. But we're just not there, and lithium needs a big correction.
And what are your thoughts on the energy space? I know your partner Gareth Soloway, he's been calling for lower oil prices up ahead. How do you feel about oil and natural gas? Do you think we could see lower prices? And then if we look ahead, the fundamentals do seem pretty solid if we're looking at a longer time frame, the 3 to 5 to even a decade out for the fossil fuels. What are you seeing there?
Well, I like natural gas right now. I do own that personally, full disclosure. So I like natural gas right now. I think that's been making some higher lows. It had gone to 10, back down to 2, and everybody hates it down at 2. So I love it for that reason alone. Plus, natural gas has a tendency to bottom in the first quarter of the year. That kind of happened right on cue. And, now it's just a waiting game to see, it takes 2 steps up and 1 step back. So that's where we are for natural gas. As for oil, though, you're in a trading range. And if oil takes out the May low, which I believe on the chart says a $64 pivot, if it takes out that low, you'll go down to 50. You get oil at 50, you buy it with both hands. As for right now, I would just remain neutral on oil. There's a lot of geopolitical events. You have a lot going on, whether it's OPEC plus saying one thing that they're going to cut every time it dips a little bit. So you just continue to watch the chart. It's staying in that $75, $74 range at the moment. So if you clear that level, you could break out to the low 80s. I wouldn't rule that out. I just don't see it going much past that right now, but I wouldn't be overly bearish on oil here. I would just say, hey, if it takes out a level, we're going to look for the next big number, and that would be $50 if it takes out the May pivot. But other than that, oil's kind of more in a trading range at the moment, and it would have to take out some break points before I could, get swayed either way. I just remain neutral there. Short-term trades in oil are fine. Natural gas, another story. I think that is bottomed, and I like natural gas now.
And how do you play natural gas? Do you invest in the futures directly? Is there an ETF that you use?
I use UNG. It just seems to be the best play. Another way to do it also is a few stocks out there. Chesapeake, EQT is a good play. And then you could also have Antero Resources, which is ticker symbol AR. That's another way to play it. But I'm in the UNG right now. And I've been in there really. I've done natural gas 3 or 4 times already. All have been successful. Right now, I'm a little underwater on it, but not by much. And it's just very volatile. It makes big moves. So just be prepared for that if you're using the UNG vehicle. I do not trade the Boyle, which is a leverage ETF. I just think that's insane. The volatility there is just too much for me. But UNG I think is fine. And you're making higher lows here on nat gas futures. And that should, once it breaks above 3, it should make a move to 5 or 6 pretty quickly.
Final question I want to ask is on trading versus investing and time horizon. So I was wondering, what is your average time horizon on a trade? Do you do long-term investing as well as short-term trades? And, a lot of people have a misconception that trading is a way to make money quickly. It's obviously extraordinarily difficult. It requires a particular sort of psychology. So how do you approach that? And for somebody who's thinking of getting into the trading game, what do you think they need to know?
Well, I can just tell you how I do it. And what I do is when I get into any particular equity, it doesn't really matter what it is. I'm usually looking for a near-term target as a trade. And then later on, I'm looking for a longer-term target where I could hold something for a big run. So I've done that pretty much successfully throughout my career. But one thing I would tell everybody is if you catch a quick gain, don't be afraid to take something off the table. Then you play with the house's money. You move your stop to break even, and you let the rest run. And that's what I try to do with everything. Now, when I traded silver back in, I'll give you an example, back in September of 2022, yeah, we took a quick gain at around 7-8%, and then we let silver run to the second target, which was over 30%. So, that's how I like to view it. Then once you get to a real toppy turning point, I let it correct, and then I let it come back in. And like silver is a play I'm looking to reinitiate now. So that's how I look at it, and that's what I like to do. Another thing you can do is once you've taken money off the table, just stick with the trend. And as long as that trend on the chart is still strong, why get out? Just let the market continue to lift it, and you'll get minor pullbacks. Nothing goes up in a straight line, but you can ride the trend. And that's why I always tell everybody, learn how to read charts. It's not that difficult to do. It'll take you a couple of years if you really put the time in, but it's such a benefit because you don't get swayed by the news. You don't get swayed, by so much going on. Geopolitical events are happening all around us like we've never really experienced before, at least in my lifetime, and I'm in my 50s. So, I've never seen anything quite like this. I mean, you got drugs in the White House for crying out loud. But that's not going to sway my trading. My trading is just going to go where the money is flowing. And the institutions move markets. That's the bottom line. I don't move a thing. I just try to read what they do. And, if I'm wrong, I have a stop loss for that reason, and I get out. And I just reevaluate the chart and get back in next time. So learn the charts is what I would tell everybody to do.
Very well said. Well, thank you so much, Nick, for joining us today. For those who want to learn more, could you tell us about inthemoneystocks.com?
Yeah, come on over, check it out. We have lots of content there. Come check out the Twitter feed. My Twitter feed is Nick Santiago 01. I put lots of content on there, for free every single day. And you can join the program. I have 2 programs, Bullseye Trading, which covers all of the major markets. It covers the foreign market indexes. We also cover all of the major indexes, gold, silver, bond yields from the 2-year to the 30-year, and everything in between. And we meet once a week. I do a live conference with all the members once a week where they could ask me anything they want about anything market related. And then I have an options program, but I don't do a lot there, but give out the trades. So come on over, check that out. We're having a blockbuster year there as well.
Great. Well, I'll put links to inthemoneystocks.com and your Twitter feed in the description below for people who want to check that out. Thank you once again, Nick, for coming on and sharing your knowledge with our audience.
Thank you so much for having me. It was a great time. Thank you.